Well, thank you for having me. And is that a little loud? Too loud? Good? So my name is Cheri Hill, and my company is Sage International, based here in Reno, Nevada. So for the last 20 years, I have worked with entrepreneurs, investors, small business owners, and have to date probably formed about 30,000 companies. So what I recognized is probably about 10 plus years ago that, there's this nasty statistic. 95% of all new businesses that start fail within the first 2 years. So I started really looking at that going, well, why? Why is that? And so what I started to recognize is that 95% of people starting businesses shouldn't. They have no idea what they're doing. They have no idea how to structure themselves properly. They have no idea all the sequential steps that it takes to be a successful business owner. And so I started teaching through the Small Business Development Center, spending a lot of time on the front end of, hey, I want to go into business. Do you have a business plan? What are all the things that you need to be thinking about so that when all those what ifs and plan B show up, you're mentally prepared? So I do a lot of work on the front end on business planning, really a lot of entrepreneur development, really helping people understand if you have this idea, how do you convert that into a viable, profitable business? And once you have that idea confirmed, then we put the foundation in place, which is the corporation, the LLC, whatever tool that's going to get you the end result. And then I spend a tremendous amount of time on the back end teaching what does it take to be a successful business owner. So I'm brought in, I do a lot on marketing, I do a lot on the customer experience, I do a lot on estate planning, just because all this applies to you. But most people don't know. Most people have no idea what questions to ask, and most people start a business because they think that's what they should be doing, and then find out after everything is spent, including their own energy, resources, time, and investment, and they end up with oftentimes nothing. But that 5% that are successful, that 5% that really understand that to be a business owner, it's a lot more than just what you're excellent at. You start to hire employees, you're in a whole different ball game. You start to get out there and market, really not understanding who is your defined target market. You're spending a lot of time and energy and resources that you don't need to, and by the time you figure it out, oftentimes it can be too late. So today I was asked to come in and talk about mainly putting the foundation under your dreams. So all of you are in business, yes? And I'm sure many of you are one person, right, in business, sole proprietor, yes? And so what I hear a lot is when I'll talk to people and I'm like, are you incorporated? Are you a corp? Are you an LLC? Oh, yes. And I say, well, how are you taxed? And they go blank. So I already know we have a problem. So let's talk about, also, how I do a lot of my education and teaching is, besides speaking, is I have a weekly radio show. It's called the Cheri Hill Show. It's on 99.1 FM Talk. And it is a local radio station, however, it's webcast, and I hear from people all over the country. So everything I talk about on my radio is about business. So I bring in experts from all over the country who are brilliant at what they do, and I share those with my audience. I also do a monthly teleseminar through Sage International. Same thing, I invite a guest who's excellent at what they do because I'm all about education. See, my passion is to eliminate the 95%. It makes no sense to me. So you're either cut out to be an entrepreneur or you're not. And if you're not, that's okay. But I'd rather you figure it out before you spend your retirement, your savings, and everything, and you're 2 years in and you got nothing to show for it. But I'm all about thinking differently and outside the box And as most of you know, because you're probably just like me, we're unemployable. We cannot work for anybody else, right? So we have no choice. We got to be good business owners if we're going to be successful. So let's talk about the first one, sole proprietorship. I won't ask you to raise your hand, but if you are a sole proprietorship, I do not have an art degree. This is you. You're going to find out why that looks like that. So, what do you know about being a sole proprietor? It's simple, yes. What else? You're totally liable for all the debts and obligations of the business. Is that a good thing? No. Okay. What else? You're the sole decision maker, right? You can write off, but you pay 15.3% self-employment tax, right? So self-employment tax, you're 100% liable. You are the business. You say, I'm in business. You hang out a shingle. Maybe you file a DBA with the county, and you're now in business. Last week, I got a phone call from a family in Texas. Dad started a plumbing business 30 years ago, very successful. Mom, two sons, all work in the business, right? It is a sole proprietorship. Dad died 3 weeks ago. Mom went to the bank because she is a signer on the bank account because the bank froze all the assets. But you're thinking, well, wait a minute, I'm an authorized signer on the account. Why don't I have access to that bank account? Because when Dad died, what happened to the business? It died with him. She has to prove, A, that he's dead. So she has to produce the death certificate, which can take about 6 weeks. Also, she has to prove that she has full authority to step up and take over that business. How did they know that bank account was frozen? Every payroll check bounced. The vendor she was paying, those checks bounced. That was her clue that there was a problem. Up to that point, never thought that there would be a problem. So as a sole proprietor, you have 100% liability, you pay the most in taxes, and if you go, the business is gone too. No to sole proprietorship. All right. How many of you are in business with somebody else, what we call like a general partnership? There's 2 of you. Anybody? Those listening out there in the big world, you exist. You're partners, right? This is a sole proprietorship. Still unhappy. Now, this is no better than being a sole proprietor, except there's one problem. It's even bigger. I am now 100% liable for all the actions of my partner. It's called joint and several liability. So if my partner goes out and enters into a contract for $100,000 and disappears, who gets to pay 100% of that contract? Now I know this one firsthand. About 35 years ago, I had a chocolate manufacturing business long before I knew anything about corporations or LLCs. And I had a partner. And one day, after 5 years, we built a very successful handmade chocolate manufacturing business, 3 retail stores. At the time, it was mail order. There were no computers. She and the bank account disappeared. Guess who is standing back here trying to deal with all the employees, trying to deal with all the vendors, trying to deal with the shutdown of you tried 3 retail stores, right? Leases, all kinds of problems. Guess who stood there facing the world? Correct. You also, because you're not taxed any differently, you're still paying all the self-employment tax, you just split that. You're 100% liable for all the actions of your partner, and there's nothing formal saying that you're in business together, right? So, what do we say? No to general partnership. So now what? We form a limited liability company, right? How many of you are an LLC? Okay, so now you're an LLC. Are you a single member LLC? And single member can be you and your spouse. It's still considered a single member LLC, right? So here's you. Hey. Now, this is where I usually get the glaze over on the eyes. How are you taxed? Because if you're a single member LLC, you're paying 15.3% self-employment tax. The one thing you did accomplish is you are now not 100% liable for all the debts of the organization, right? So there is this box around you as a business owner that says, I'm separating myself from the liability. However, you change nothing with regards to how you're taxed. So that can be a problem. The nice thing about being an LLC, and this is one of the things I teach specifically about entrepreneurship, is your mindset. When you're in business, you need that separation between you and the company, right? That's the firewall for liability protection. It also allows you to start building a brand, a mission, goals, everything that are separate from you. So you start to think like a business owner. And when you start to think like a business owner, you start to act like one. And acting like a business owner is, I am not the business is not me, right? Because now you are the president of your organization, you're building a brand, you're building marketing, you're out doing business as this company and not just you. Does that make sense? Why does that matter? Because the world now recognizes that you are not the business, right? Huge. If you are a single member LLC and you've made no tax election, you're still paying 15.3 self-employment tax, and what that means is the income flows in, your expenses are paid out, but at the end of the year, because it rolls right to your personal tax return, before you can write off any of your personal deductions like mortgage interest or medical or any of that, you have to pay that 15.3% self-employment tax. So you're not really tax advantaged at this point. So one thing we can do with an LLC, which most people don't know, is you can tax it 4 different ways. I can be taxed as a single member, disregarded, like sole proprietorship. If I have a partner, I can tax it as a partnership, which is ideal for what I call passive income, rents, royalties, things like that. Some of you may be earning royalties, right? Because if you sell your software or you license it, and you may end up receiving royalties or licensing fees, which is considered passive. I can have it taxed as an S Corp, or I can have it taxed as a C Corp. And I'm going to talk about those 2 right now. Any questions on single member LLCs?
I used to be a sole proprietor, and then I got an LLC. And when they asked for my business name, do I need to put the LLC at the end, or does it matter?
So if I'm now a limited liability company, and I'm signing contracts or creating my business cards, do I need LLC after my name? Yes. Yes. You want to let the world know you're not a sole proprietor. So like my company, Sage International, Inc., I want ink stamped on my forehead so people know it's not Cheri Hill doing business with you. It is Cheri Hill as president of Sage International doing business with you. Do you want it for some legal reason? Yes, because if you're saying that's how you're doing business, then you must have the LLC in the company name on everything that you're doing. Well, it's a legal entity, and you're saying you're doing business through LLC, so yes, you want LLC on everything that you're doing. Any other questions? Yes?
Is that tax election for the LLC dependent on the state that the LLC is filed in?
The election is federal, so whether it's S or C, and depending on what state you're operating out of, it may depend on what tool we want to use. I have a toolbox. In my toolbox are corporations, LLCs, partnerships, trusts, nonprofits, all kinds of entities, and depending on what state you're in, like California, I will not file a single member LLC. Why? Because the states keep gutting, right? If the California says, if the IRS is going to disregard you for tax purposes, we're going to disregard you for everything. So depending on the state, we'll choose which way to file. They do get, well, they're not the only state, but yeah. But their courts are notorious for trying to gut what we call the corporate veil and all of that. So that's one of our considerations. Other questions on LLC. So, should I be an LLC versus being a sole proprietor? Yes, right? The key is, how are you taxed? So let's talk about the S Corp. And then we have the C Corp, right? So we have a C, we have an S, and we now have this other new entity called a benefit corp. I mean, there's all kinds of things that are going on out there in the entity world, and that's what we do, make sure we stay up on all that and know when to use them when it makes sense. So the S is basically, here you are now the shareholder, or in the case of the LLC, you're still the member of the LLC, but now the taxation. We file an election with the IRS. It says that we want the entity to collect the income, pay all the expenses, but how do we pay ourselves? And so some you're going to take in wages, and some you're going to take in distribution. It is this distribution that reduces self-employment tax. If I'm a C Corp, it's wages, bonus, benefits, expenses, all that good stuff. So if I'm an S, income flows in, all expenses go out. What do I mean by expenses? Everything it takes you to run the business, right? So whether it's attending events, whether it's buying new computers, whether it is traveling, whether it is joining organizations, your home office. How many of you write off your home office, right? How many of you don't even know you can do that, right? So there's all these ways that you can expense out money which is not taxable to you. This is where the real key comes in. So if I'm an S, I take out all my expenses, I need to pay myself some in actual W-2 salary, which is reasonable to what I do for a living, and then the rest I can take out in distribution, which distribution is considered passive income, not subject to Medicare, Social Security, all that other stuff. That's the power of the S. The only problem with the S is if I want it to pay any of my benefits, health, medical, dental, vision, any of that kind of stuff, it is considered part of my income, therefore it is taxable. That is the downside of being an S. It is also, you cannot have any other entity own an S except an individual. So if you were going to joint venture or start with other people and they wanted their LLC to be the owner, you can't do that with an S. Questions on the S?
I'm an S corp, and my whole scientific research on doing this, my accountant said it's the best way to go. That's the reason I went that way. Now, we talk every year about how much I can take as wages without getting the IRS excited. Because ideally, I would take $0 for my salary and do the rest of distribution.
Right, and the IRS will swoop in.
Exactly. So
Right.
what's the general
I look at about 60-40, but again, it depends on the business. So if I'm a doctor and I'm in an S corp, it would be unlikely that I would earn $2 a year for wages and take the rest out on distribution, right? So maybe a doctor normally makes about $100,000 a year, so he should reasonably take a salary of $100,000, and then the rest can be distribution. There is no fixed rules with the IRS. Exactly. Mm-hmm. Huh? Well, you don't win with the IRS, so the last thing you want is even looking at you. They're going to look over here. Sole proprietorships are audited way more than any type of entity because the people most likely to cheat are the sole proprietors. A lot of cash businesses shoving it under their mattress, and pretty soon it really hurts them in the long run, especially if they ever try and sell the business because they can't prove the income because they're pocketing the cash. So it catches up with them, usually in a really bad way down the road. So not advising that. The C Corp is the most powerful because it is the only tax-paying entity. So when I mean it's the only tax-paying entity, if I'm a sole proprietorship, all income, all profit or loss is reported on my personal tax return. If I'm a general partnership, all income, profit or loss is reported on my personal tax return. If I am a single member LLC, taxed as an individual, partnership, or S, it is reported on my personal tax return, and I am responsible to report and pay any tax. S, same thing, flows down to you as an individual. You are responsible to report and pay any tax. The C Corp is the only tax-paying entity. Income flows in, all expenses are paid out. You become a W-2 wage earner out of your own business. If there is any tax due, corporation reports and pays it. So why is it more powerful? Because I have the ability to write off a lot more. Especially if you have employees. So people, one of the things is if I have employees and I want to offer benefits to my employees or to myself, I have to make it available to everybody. So everyone looks at it and goes, well, if I have a C, then I have to pay, medical or dental for my employees. Well, do you want good employees? It's a cost of doing business, but it's a complete write-off to the company, and it's non-taxable to the employee. You guys, a lot of you, software development, so give me an idea. You write the software, you create the software, do you sell it to the general public? Do you sell it to other companies? What is kind of normal? All right. And so you would be considered, I don't know that you would really fall under personal services, so like an architect or a lawyer, if they don't do the work, it doesn't get done, right? So in this particular case, you guys can outsource to other people, you can write the code and do all this stuff yourself, right? And because you end up with a finished product called software, you can now sell it on the open market, you can license it to somebody else, so it really becomes a product. You guys could take advantage of being a C Corp. Real estate agents, personal services. Architects, personal services, because again, they're the ones doing the work. So if nobody's ever talked to you about potentially becoming a C, why is this fantastic? That 15.3% self-employment tax doesn't exist, and You, the employee, you pay as you go, right? Your W-2, and the company pays in the other 7.5, and it's a direct write-off to the business.
That's only if you have products, right? If you perform a service such as work for hire, because you're a programmer, you can't resell that because you did it as work for hire, then.
Yeah, if you're a work for hire, and you are the one going in on site doing whatever, even as an independent, then you would be personal services. Mm-hmm. Then an S would make sense, yes.
What if you did 75% products, 25% service?
Then I always look at what's the best advantage for me. And if I could get away with being in a C, then I would, because you do have 25% of your income comes in from selling a product. It's when it's 100% work for hire that C is not going to be. And why is that? Because there's this nasty tax called personal service tax. And it's like 49%. So we eliminate that by taking the S election. That's why most doctors, dentists, attorneys, they're all S corps, right? Was there another question? Did you have a question?
Yeah, well, I'm sort of watching this as a sort of foreign observer who only knows about one sort of company, which is really like your C class. I'm sort of wondering, like, why you would be an S-class company if a C-class company is much better.
Well, here's the funny thing. Most people, when they start in business, they expect losses in the first couple of years. And so, because the S is a pass-through, those losses can flow down to your personal tax return and offset other sources of income if your spouse is generating W-2 wages, right? The problem is when you become profitable, they never unelect S status, and they continue to shove all that profit down onto their personal tax return. What's your personal tax rate? Is it 15%? No. Starts at about 25, 30, 35, right? So you're taking all that profit and you're putting it down onto your personal tax return, matching it up with any other sources of income, and you're going to pay more tax. And this is one of my biggest messages to the world. Most people expect that their CPA is going to advise them or look at all of this, but most CPAs are what I call historians. They take your information, they plug it onto a form, and they send it to the IRS. The CPAs I work with are they're advanced tax planners. So they're looking at your stuff, they're figuring out what you're earning, they're figuring out how do we maximize the tax code, and they start to give you suggestions about how can you effectively reduce your taxes. But that's not the norm. So that's why I'm huge on education. That's why I stand out and talk to groups, because I want you to understand you and you alone are ultimately responsible to understand this. Doesn't mean you have to know the tax code. My God, it's boring, right? But you do need to know what you can take advantage of, what applies to you, and how you can maximize that. Yes, sir?
So the C-Corp, any dividends that you pay from the C-Corp to shareholders, those get taxed again, so you basically get taxed twice.
So, dividends. If I'm a small, closely held corporation, me as the shareholder or me and my spouse as a shareholder, I will never pay myself a dividend because of the double taxation, right? So what double taxation is, the company makes a profit after it's paid out all its expenses and everything. It says, well, we're going to issue a dividend to our shareholders. So you can't write it off at this level, right? So you've paid taxes on the profit. Then you distribute down to the shareholder, who now has to report that as income, and they get to pay tax. Why will I never issue myself a dividend? Because I will take it out in wages. I will give it to myself as a bonus. I will give it to myself as benefits. I will expense more stuff. I'll give you a great example.
But if you can't make enough money, I mean, it's probably not possible to just expense all the profit.
Really? Let me share this story. So, Sage International is 20 years old. Thank you. And so about year 3, we were out speaking at a big event, and a gentleman walked up after we laid all this out. Of course, LLCs didn't exist then. And he was a very successful real estate investor. Hugely successful. Well, what happens when there's a lot of success? Who's looking at you? Everybody! Because who wants your money? Everybody else, right? So we did a lot of structuring for him, and I remember him sitting in my office going, Cheri, I'm going to write this book, and it's going to be just a national bestseller, and for everything you've done for me, for getting me structured, reducing taxes, giving me peace of mind, because now I know there's a firewall between me and all the people that want to come after my assets. So he wrote the book, hugely successful. His name is Robert Kiyosaki, Rich Dad, Poor Dad. How many of you read that book? And he said, for that, I'm going to put you in that book. So I'm actually in Rich Dad, Poor Dad. Our 800 number is in the back of the book, right? So we went from year 3, making about $280,000, to year 4, over $4 million. And he asked me, Cheri, are you going to be ready? I'm thinking, he's writing a book. I was not ready. But I had enough sense in October of that year. So this is the year we're making $4 million, right? In that year, I called my CPA and I said, hey, based on what we've already earned, what it's going to look like through the end of the year. Remember, this is October. What's the check I'm going to have to write to the IRS? She calculated it out and she said, Cheri, you're going to have to write the IRS a check for about $350,000. I said, well, what can I do? So for the next 3 months, I raised every employee. We doubled all our salaries. We set up, at that time you had to have a pension and a profit sharing plan. So we formed both of those and we socked about $100,000 into that, right? We bought all new computers and upgraded and just spent some money, and then we had one hell of a Christmas party. Do you know how much check I wrote to the IRS? 0. Why? Because I knew that I needed to find out now what my obligation would be. How many people look at their obligation come January or the end of December when they can't do anything, and then they owe the IRS? So when you say you can't spend the money, you need a woman on your team. Don't ever tell me I can't spend $300,000, because I can very quickly. But really what it was about was the knowledge to know that I had time and I could do something, because I surrounded myself with brilliant people who taught me, don't accept what is, challenge what is, and figure out how to fix it. And so that's really when it became so clear to me that taxes are a game, and you got to know the rules, and you got to be able to play the game well, right? So if you are a sole proprietor, or if you're just a W-2 wage earner, I mean, the tax code really is this. You get to earn, you get to be taxed, and you get to spend what's left. But if I'm a business owner, I get to earn, I get to spend, I get to deduct, and then I can pay a tax on what is left. So that's why I will never pay myself a dividend, and that's why I will not owe tax, because I'm going to make sure that I'm always looking at how can I expense, How can I create benefit? How do I know what is right, reasonable, and fair for my company in order to be in business? For those of you working in your home, are you writing off the portion of your home, the maintenance, the landscaping, the housekeeping, the taxes, the insurance? You have that right.
No.
That's only a small portion. I mean, you say that you doubled everybody's wages, right? Yeah, and you are going to pay tax on wages too. I mean,
I'd rather pay 7.5% on somebody's now $30,000, $40,000 wage than 25 to 30% on corporate income at $350,000. Remember, when I increased the wages and I set up, the money didn't come out all in one shot. It was over a period of time, right? So I managed it. No, go ahead.
Here it is, it's going to be October, so we still have 3 months if we need to buy computers or books or whatever we need for our business.
Vehicles, I work with a lot of contractors. I mean, now's the time you buy your trucks, your vehicles. For you guys, it's upgrading your equipment. If you're not taking advantage of any kind of retirement planning, this is the time to be setting that up, right? So all that's available to you guys.
I want to mention that if you develop and sell software, the IRS doesn't look at you for new versions to take an R&D credit.
So how do you solve that?
I'm not following the
No,
question.
you say you're researching the fact that there's forward-going research that you have to do to stay active in the product area. You just make an allocation. And I've been audited multiple times, and they never looked at, they said, yep, you got to stay market.
Well, sure, you got to stay current. You got to go to events. You've got to travel the world and see what other people are doing, right? Yes.
Are there any restrictions on any of these if one of your primary whatever is a foreign person?
So is there any restriction if one of my owners is foreign? There is no restriction. However, are you from Australia? Okay. So we have treaties with countries all around the world, Australia being one of them. So what is your name? Tony. If Tony owned part of my company, then I would have to withhold so much in tax to give to the IRS before I distribute to Tony. But then Tony, when he reports and pays tax in Australia, will get a credit against what he owes Australia for what he paid here. The only time there is a restriction is if you are an S. No foreign peeps can own an S.
Yeah, see, my husband is not an American citizen, but he lives here legally.
Yeah. You can be an LLC. You can be a corp. So.
I have a chance to get this contract with an Irish firm. They're going to pay me in American dollars. Anything I have to worry about, any special, just spend it.
But you're definitely going to want to fly over there and meet with them and drink beer and discuss. You betcha, and that'll be 100% write-off.
I am in one of these lowly sole proprietors right now at this point. I had looked into moving into an LLC, and at the time, it wasn't that it was cost prohibitive, it was just, I've got such close relationships with I just do independent consulting for multiple companies and have some products that I've kind of got in the work. I have a full office at my apartment that is full. If the IRS walked in and looked, and so 7 computers they got running in here, yeah. But one of the biggest catches is always in the rules is that you must have a separate entrance.
You don't. That rule is gone.
Really?
Yes. Where are you?
Tennessee.
Tennessee. Yes. So we should look at forming an entity. Again, sole proprietorships are audited, but that's not the case anymore.
But that is not so. Yeah, because and because of that, I haven't written off electricity.
Oh.
I haven't written off
any of that stuff
See, that
because
just breaks my heart.
this comes. I'm thinking they're going to come in at me. I might as well just be on the safe side.
It's not safe. You're way more exposed out here. So I'll just say this as a plug. I form entities in all 50 states. I offer a free 30-minute consultation so that we can talk about what you're doing. And for me, it's not about, I'm not a filing service. So we're going to figure out what it is you're doing, what you should be doing. Yes, we'll form the entity and put that foundation on what you're doing, but then the relationship really kicks in after the fact because I'm an educator. So I'm going to make sure that you have someone to talk to. Hey, Cheri, this is what I'm doing. Does this make sense? Or what are some of the things that I should be taking advantage of that I don't even know what to ask? And then a lot of times I give questions to my clients to go back and ask their CPA. Because I spent a lot of time educating CPAs, believe it or not. So it's all good. All because of chocolate. Yes, I got really mad.
Did you find her, by the way?
She filed bankruptcy.
Thinking there must be a limit to when this starts to make sense, because if you're only making $5,000 a year,
Yeah.
I mean, it wouldn't make sense to have a C corporation, or it wouldn't say.
Right. So if you're only making $5,000 a year, how many years have you been in business?
Well, I'm not.
Oh, okay. I was going to say, maybe we ought to review the business.
Where's
Yeah. When does it make sense? Cost benefit. So if you're only going to make, and this is a part-time thing and something you kind of just play with, and yeah, we're not going to form an entity if you're only going to make about $5,000, right? But at some point, well, sure, because again, $50,000 taxed at, well, less expenses, right? You're going to pay 15.3%. So typically in that scenario, we may start out as an LLC, tax as an S, or something. But for me, I deal with a lot of direct sales. Used to be MLMs, right? We don't call them MLMs anymore. We call them direct sales. So somebody would come to me, oh yes, I'm all excited, these vitamins, these whatevers, right? And so oftentimes I will send them and go, you know, come back in 6 months, and if you're still passionate and excited and starting to make money, then it makes sense to form an entity. But if it's something that's not going to stick, or this is a hobby, then the cost benefit doesn't make any sense. But this is what I say to sole proprietors. If you've made the decision to be your own boss, and this is something you're serious about doing, I don't like to do things twice. So I'm not one to be a sole proprietor. I'm going to go get a business license, and I'm going to open a bank account. I'm going to file a fictitious name, hang out my shingle, start building a website, starting to create expenses. And then 6 months down the road, you heard me speak, and you said, oh my gosh, I need to be an entity. So we form the entity. We go out and we get a federal tax ID number. Guess what you get to do all over again? Go get your business license, open a new bank account, do all this other stuff. So it just costs you money. So if you come to me and you say, this is what I'm doing, then let us put the foundation in place so all of your marketing, everything that you're spending money on, everything you're doing to tell the world that you're in business, you're doing under the company name. Right? Does that make sense? Questions?
Yes, I'm currently an LLC, but treated as a pass-through entity. Is it too late in the year to switch that?
Yes. So the only time we can change the taxation is January through March 15th for the next year. So for 2014, you can make the election. For 2013, you're stuck. Other questions?
So what's the thing about, I have a DBA for something else. What's the significance of a DBA? What's it value?
So a fictitious name is where you want to do business. So again, Sage International doing business as Sage Publishing, right? So I want to be able to market, maybe build a website, maybe have people pay that company name so I can get a separate bank account, then that would make sense. But it's usually only in the county that you're located. Right, so if it's something you're going to do national, then oftentimes we'll look at forming a separate entity that carries that banner so you can take advantage and do things like that. So again, oftentimes in the beginning, we'll go, let's file a DBA, test it, and if at some point it makes sense that we need to spin that off into its own entity, then let's do it at that time. Other questions? Yes.
Comment really that one of the things that didn't get mentioned probably because it doesn't apply to a lot of people or companies is first of all you're like ring fencing your liabilities. And like I write structural engineering software, so theoretically I can make a mistake and $1 million worth of building falls down. But it does mean that when you shut down and you liquidate the company, you draw a line under your liabilities. Like when I immigrated from the UK company got wound up and like is no more. So there is like nothing to sue, whereas if something went wrong, people would be sending the lawyers to Australia. So,
right. And so this is one of the biggest things, biggest challenges is when people say they're winding up. So I see this all the time. It's time to renew. Every state has some kind of an annual filing requirement, a list, or something, and they don't do it. Pretty soon their entity goes into, delinquent status, or at some point the state might administratively revoke it, something. And because in the business owner's mind, the business is done, they may have closed their bank account or whatever, they think that it's non-existent. You're still 100% liable. And I have seen lawsuits come back 2 years later against a company that they, in their mind, doesn't exist. So in order to truly wind up a company, besides getting rid of all the assets, closing the bank accounts, making sure that all the assets are out of the entity and in the entity's name, that we file a formal dissolution. And you file a final tax return with the IRS. Because if you don't tell the state and you don't tell the IRS, they all think the business still exists. And I do a ton of cleanup. In fact, I have a department, 409, which is my SAGE facilitator, because I do a lot of cleanup for people. And I see it a lot with real estate investors. Oh, I don't need the LLC anymore, or this limited partnership because I don't want to pay the annual fees, it's costing me money. And then 2 years down the road, they want to sell that piece of real estate that was titled in the name of the LLC or the limited partnership, and guess what? It's revoked. So they either have to go back and pay all the back fees, or in one of the cases I had, somebody else came in and filed a company with that exact same name, so we couldn't bring it current, and the title company would not let him sell the property because he had no authority on an entity that's in delinquent status, and somebody else had already taken the name. Gets really ugly. So if you're going to have a company and you're going to have an entity, you have to maintain it. And we help with all of that, of course, but it boggles my mind that people spend all this time going into business, and when it's time to get out of business, they just think, well, because I don't think it exists anymore, the rest of the world must think that way too. The IRS, the states, the courts, the disgruntled people see it different. So, question? Other questions? Yes.
What's your feelings about trademarking your company name?
Well, it depends. So you guys, a huge amount of what you do is intellectual property, right? IP. And so that's one of the biggest problems that people make is they don't protect their IP. And trademarking your company name doesn't make a lot of sense. But if you create product that have uniqueness and specificness and you don't want anybody else to use that, then absolutely look into the trademark. And you have to protect your intellectual property. And oftentimes what we'll do, especially with people like you guys, where you're creating a lot of intellectual property, we may form an LLC that holds all that intellectual property separate from your business over here of going out and work for hire and all of that. So if something happens over here, they don't get to touch the IP. Through this company, you can now go license, you can have your company licensed directly from your other company, so you can shift income. There's all kinds of cool things we can do. Everything I do looks at three things: asset protection, tax reduction, and the beginning of estate planning and exit planning. So every tool, every strategy, those are the things that I'm looking at, and that's why they're completely unique to each and every one of you. There is no one answer, no silver bullet, no this fits everybody. It totally depends on what you're doing, how you're generating your income, and what the end result or goal. Do you want to sell the business? Do you want to pass it down? Do you want to just have it end when you end? And we have to understand all of that. But now, if there's a way to shift income, because we're moving the IP into a different little box over here, which can help you from a tax standpoint, then again, why wouldn't we take advantage of it if it exists for you? Other questions?
Yes, with the LLC, with the S corp election, how would you calculate I know the IRS requires you to put some of the money as wages instead of distributions, like for a small software business like you?
Well, so the question is, how do you decide wage versus distribution? It depends on how much money you're making. So I like the rule of about 60-40, but if everything that you take in you need to live on personally, then again, you're going to look at how are you calculating wages versus distribution. So that's the advantage of the S. You get to do that. Wage. But it could be 50-50. It just, again, depends on what is reasonable within your industry, your credentials, your talent, what would seem reasonable for you to be paying wages. So the other key is, when you think about, and you can do this through all of them, how do you decide how much to pay yourself? So if you go, well, in my business, I need a cell phone. So let's say I pay myself $5,000 a month in wages, and my cell phone bill is $200 a month. If the company pays the cell phone bill, then I can pay myself $4,800 a month, right? Thereby reducing my wages because the company now just picked up an expense that I need reasonably to run my business. If you go visit clients, I hope you're tracking your mileage, right? I hope that you're buying shirts that have your company name on them, right? So you start to be creative around how can the company pay for more expenses that I require to run my company, but I don't need to take out in salary. That's the game. And when you master the game, then you can feel confident that you're paying your fair share in taxes. I'm not advocating tax evasion. I am advocating tax avoidance because we have the legal right to do so. But most people fear the IRS, and most people don't want them in their business, and I'm in agreement with that. So you play by the rules, you do everything that is reasonable and legal, but you have to have an understanding of what that looks like for you, and then you take advantage of it. Other questions? How am I doing? Done? So there's a lot that I teach and work with individuals. So as I said, I offer a free 30-minute consultation. Take advantage of that. Let's noodle on what you're doing, and if you're taxed appropriately, you're in the right entity. Does one entity make sense? And it's very powerful because I can pretty much guarantee by the time we're done, I'm going to help you. And so my goal is to keep people in business. That's what I'm passionate about. And any way that I can do that, that's what I do. So, great. Thank you, guys.